below there. And then what we're looking at is likely this is this is your top. There's your B wave. And so we're tracking a C wave that would be targeting around 4,300 or excuse me, 3,000. And I think that's generous. I think we'd probably go under 3,000, but that would be the end of this secular bear market that we're in. And that's where we would be buying hand over fist with the cash we've been saving up. But the way that it would play out, all C waves are 5-wave moves, right? So here we go. 1, 2. This would be a 1, 2, 3, 4, 5. So we'd have a third wave that would end below 4163, maybe 4185. So let's say that we get one more low, and we get 4185, and then we get a 3-wave move up. We're going to probably get pretty defensive, because that's telling me that we're probably getting some kind of a 4th wave move. It'll be more difficult to tell in the S&P 500. We're going to use the NASDAQ, and I'll show you why, to be our guide. But we would get a 4th wave and then one more drop towards 4,000. And that would be your first wave in a very large degree 5-wave pattern targeting 3,000. And so think about, let's say that this happens from July to November was your first wave and it went down that much. We'd get a 2nd wave retrace, and then we'd have the real fireworks would happen in that 3rd wave. So whether this is happening now or it's going to be put off into all of 2024, doesn't really concern me right now, because we have the levels at which we're going to pivot completely. And that is a breakdown below 4185, 4163. Below there is where you want to start getting concerned. And so what we would see is probably a break to 4,000. That would be your bottom. And then we'd see a retrace back to 4,200, maybe even 4,300, who knows? But that 2nd wave would be where you really prepare yourself for what's about to unfold. So that's what we're looking at right now. These are the levels that we are monitoring.